big crypto news in the last 24 hours. Trillions of Shiba Inu tokens moving back and forth. But amidst the celebrations, an important detail slips under the radar. It seems like whales aim to hide their behind-the-scenes maneuvers, but guess what? People have just uncovered it. But what am I talking about? Well, let me explain. Disclaimer. Today marks a truly historic day. Hong Kong has just approved a spot Bitcoin ETF, applicants say. This development comes hot on the heels of the United States approving their own Bitcoin ETFs 3 months ago. And hold on. As now, you might be scratching your head, wondering how Bitcoin ETFs could be approved again if they were already given the green light 3 months ago. Well, here's the deal. Bitcoin ETFs in different countries are like different flavors of ice cream. Just because vanilla ice cream is available in the United States doesn't mean you can't have chocolate ice cream in Hong Kong. Each country has its own regulatory process and stock market, so they can approve their own versions of Bitcoin ETFs. Think of it this way. Imagine you have a favorite snack that's only available in your hometown. But when you visit another city, you find a similar snack that's equally delicious, but made with different ingredients. That's kind of how Bitcoin ETFs work in different countries. And let's not forget that the approval of the first Bitcoin ETF in the United States was massive news for crypto enthusiasts because it opened up new opportunities. It meant that regular investors could now easily invest in Bitcoin through their brokerage accounts without needing to directly buy and store the cryptocurrency themselves. We've already seen the impact of the Bitcoin ETF approval in the United States on the price of Bitcoin. It shot up to new all-time highs of over $70,000 per coin in just 3 months. And let's not forget about Shiba Inu, since it's closely tied to Bitcoin's movements, as we've seen in the past. Following Bitcoin's gradual surge for months post-ETF approval, Shiba Inu mirrored its trajectory but took a different turn, skyrocketing by over 300% in less than a week in March. And here's something very important. With the alleged approval of Bitcoin ETFs in Hong Kong, it means that the trend is spreading around the globe. This is huge news and super bullish because it shows that more countries are recognizing the potential of Bitcoin and are making it easier for their citizens to invest in it. Think of it like a popular song that starts playing on radios worldwide. It's not just limited to one country anymore. It's reaching audiences everywhere, making it even more popular and accessible. And the impact of this news on Shiba Inu is already noticeable. In notable whale activity, major holders of the meme-inspired cryptocurrency Shiba Inu have ignited on-chain fireworks with a staggering increase in their holdings. Data from Into the Block reveals that these heavy hitters accumulated a jaw-dropping 2.85 trillion tokens in the span of just 24 hours. The surge is particularly notable in light of the large holders' inflow metric, which indicates a 208% spike from the previous day's holdings, reaching a colossal 1.37 trillion tokens. This influx translates to a staggering estimated value of almost $70 million flooding into the wallets of these crypto whales. And remember, Shiba Inu is highly sensitive to Bitcoin developments, so these whales are potentially eyeing potential gains and might not want to miss out on the action. This sensitivity means that usually, when Bitcoin moves, Shiba Inu tends to follow suit, sometimes with even more significant swings. This sensitivity presents an opportunity for educated investors to diversify their portfolio strategically. By keeping an eye on Bitcoin's movements and understanding how they affect Shiba Inu, investors might capitalize on potential gains while managing risks effectively. Think of it like this. Suppose you're planning a road trip and you know that certain routes tend to have heavy traffic at specific times. By planning your journey accordingly and choosing less congested roads, you can reach your destination faster and more smoothly. Similarly, by staying informed about Bitcoin's impact on Shiba Inu and adjusting your investment strategy accordingly, you can navigate the crypto market more efficiently and potentially maximize your returns. And now you might be wondering, what impact might Hong Kong's Bitcoin ETF have on the crypto market exactly? Any predictions? Well, that's a good question. According to Singapore-based Matrixport, Hong Kong-listed Bitcoin ETFs could unlock up to $25 billion in demand. Matrixport, a crypto services provider in Singapore, expects that new investors might move billions into Hong Kong-listed spot Bitcoin ETFs through the Stock Connect program. This program allows qualified mainland Chinese investors to access eligible shares listed in Hong Kong. And based on their analysis, this could result in up to $25 billion of available capacity for these Hong Kong Bitcoin ETFs. This estimate is based on the assumption that the average unused annual southbound connect quota over the past 3 years would be directed towards spot ETFs. And this is where things get interesting. Getting back to the massive Shiba Inu accumulation during the last 24 hours, this is only one part of the story. It seemed like a bullish signal, suggesting renewed interest and confidence in the meme-inspired cryptocurrency. However, as the plot thickens, it emerges that this surge in accumulation comes hand in hand with a significant outflow. During the same period, these deep-pocketed Shiba Inu investors offloaded over 3 trillion tokens. This hefty disposal outweighed accumulation, leaving a net decrease of 150 billion Shiba Inu tokens over the past 24 hours. And this is very interesting. This tug-of-war between accumulation and disposal speaks to the complexity of investor sentiment surrounding Shiba Inu. As we reflect on this scenario, it prompts us to consider the motives behind these actions. Why are some investors accumulating while others are selling off their holdings? Are they reacting to short-term market fluctuations, or do they have a long-term strategy in mind? These questions underscore the importance of understanding market dynamics and investor behavior in the crypto space. The trend is underscored by the large holders outflow metric, which soared by over 300% during this period, indicating a heightened rate of outflows compared to inflows. Consequently, the large holders net flow indicator dipped into negative territory, signaling potential turbulence ahead for the popular cryptocurrency. Despite this setback, on-chain data suggests that Shiba Inu typically does not linger in the negative zone for long. The question now looming over the Shiba Inu community is whether the flurry of activity from bullish whales is anticipated or a potential shift in the market dynamics toward outflows is more likely. This is a super strange but interesting situation to look after because it presents a fascinating dichotomy. On one hand, the surge in accumulation by bullish whales indicates optimism and confidence in Shiba Inu's future prospects. Yet, the significant outflows and the subsequent dip into negative territory for the large holders net flow indicator raise concerns about potential market turbulence. This juxtaposition of bullish accumulation and bearish outflows creates an intriguing dynamic that investors and analysts alike will be closely monitoring. It's a scenario that highlights the complexities of the crypto market and underscores the need for careful analysis and interpretation of on-chain data. One potential reason behind the recent surge in Shiba Inu accumulation and subsequent outflows could be reminiscent of the pattern observed when the Bitcoin ETF was first approved in the United States. While the eventual outcome was overwhelmingly bullish, with Bitcoin soaring to over $70,000 and reaching new all-time highs, the immediate aftermath was quite the opposite. The market experienced a temporary downturn, with prices plummeting before eventually rebounding and embarking on a significant upward trajectory. So, the question now arises: will the crypto market face a similar short-term dip before finally beginning its growth path, especially if Hong Kong investors start inflowing billions of US dollars into the market as anticipated by the Matrixport report? It's a thought-provoking question that highlights the inherent uncertainty and volatility of the crypto space. While historical patterns may offer insights, predicting future market movements remains a challenging endeavor. As investors and analysts ponder this question, they'll be closely monitoring market dynamics and on-chain data for clues about the direction of the market. The interplay between bullish accumulation, potential outflows, and the broader impact of global developments, such as the alleged approval of Bitcoin ETFs in Hong Kong, adds an extra layer of complexity to the equation. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.